Good afternoon, everybody. I hope you're all well today and looking forward to the Easter weekend. Obviously, we've got markets in an interesting place at the moment. We'll just notice in you haven't heard of Linus? Okay, we'll cover that, Gary, because it is a regular. It is a regular. Anyway, let's kick things off. I hope you can hear me and see me okay. Just let me know if there's a drama. Or actually, let me know if it's okay. Obviously, you can't let me know if you can't hear me. But that's all cool. Great to see you all here. Obviously, these are my opinions and not representative of Go Markets. And as we are looking at live markets, then just bear in mind this is for educational purposes only, and nothing you see or hear should be taken as direct advice to take trading action. You've got a trading plan to be a guiding light. My job here is just to talk about what's happening. Good afternoon, Shane. Hey, David. Yeah, my job is to just give you a little nudge about some of the things that are changing in market sentiment, etc. And let's start by having a look at what's come across the news. Obviously, there's a mixed session on Wall Street last night. Nasdaq did very well, closing up in excess of 1.5%. Dow was down, and S&P 500 was up. Again, it was primarily a tech-based rally, so that was really the story behind the numbers. US futures are trading near neutral, with a little impact of Biden's announcement and his speech of his infrastructure plan. We are seeing the Nasdaq push slightly higher. We'll have a look at those in a moment. And Asian markets look cautious but positive heading into the long weekend and the big data 24 hours. Generally speaking, they are in positive territory, as I've said, and quite choppy as people reposition prior to the weekend. Yesterday, the US dollar index traded neutral if we move into the FX market, and we had a slight bounce in precious metals, but they're still looking pretty bearish. Again, we'll have a look at some charts in a moment. And a big day today, we've got Aussie trade balance numbers already out. We've got Chinese PMI numbers coming out within about 15 minutes or so. And then we've got UK, Eurozone, US PMI data coming out later today. And on top of that, we've got US weekly jobs. Now, the stock markets are shut tomorrow, but markets and FX markets are open in the early part of the session. So those non-farm payrolls numbers, which are due to come out tomorrow, are likely to be an issue. Okay. No worries. All good, Gigi. Okay, so let's have a look at some details behind all this. So, quick flick at the at the economic calendar, and obviously the trade balance figures came in shy in Australia. The exports way down on what's expected, other imports were increased. That's not a great number, and the markets had a little twitch temporarily when that number came out. Retail sales, however, came in better than expected, and so that's helped things along a little bit. There's that Chinese data out in 11 minutes. We'll have a look at what impact that has, if any. Outside of that, we've got retail sales coming out of Germany, which could be quite important, particularly as they're still fairly tight in the lockdown. But you can see all this manufacturing PMI data coming out. But really, it's going to be the big numbers. It's going to be the Eurozone, the GB pound. And later on, we've got the US. About an hour before market open, at around about 8:30 Perth time, 11:30 Eastern time. For this week only, thank goodness we're getting back to 2 hours difference between Perth and Melbourne. We are in a place where that is going to influence markets, obviously. But we have had good data out so far this week, so that's helped markets along a little bit. And of course, there's Good Friday tomorrow. But there's that non-farm payrolls thrown in just unusually on a public holiday. If we look at the futures, these have turned slightly positive. They were flat as early on in the session. We can see the Nasdaq is again outperforming, with the other three major indices slightly to the downside. If we look at gold and silver, they're down again today. We'll have a look at charts of that in a moment. You can see a bit of a mixed picture on the FX front. Some general weakness in the commodity-based currencies. Yen pretty flat, USD pretty flat. So really not a massive amount going on, but we'll have a look at some pairs and identify some key levels in a moment. And we're just seeing a slight uptick in oil again, after really what's been a fairly weak fortnight with oil. See the VIX down, market's feeling a bit more comfortable with some of that data coming in. And we can see the 10-year note is pretty flat. Yields seem to have flattened out a little bit, and that seems to have removed itself from the headlines a bit, which is maybe why some of the buying's coming into tech. If we quickly look at what's happening, you can see the Nikkei's up 1.2%. These are obviously delayed figures. We can see the Kospi up on the back of the Nasdaq going up, and the Hang Seng doing okay as well. There's Biden and his $2 trillion infrastructure plan. But as I said, markets haven't really responded significantly to that. Let's have a look at some charts, put some sentiment behind the headlines. You can see the US 500 daily, that very, very slight move higher in Asia today. But if we put it on a 15-minute chart, you can just see it's really gone nowhere since open. A little bit of sell-off at the end of the session, possibly due to the end of quarter repositioning, but nothing to write home about. Look at the Nasdaq on a 5-minute chart. You can see it is slightly higher in Asian trading, but struggling to break out of this short-term range that we're in of around about 15 points. But again, worth keeping an eye on if we start to get a move higher, and particularly if we break this 13,144 level, we could see ourselves back up maybe 25 points. So again, for short-term traders, there may be something to look at there. If we look at the US dollar daily, there's that session yesterday, just shy of neutral. Really quite a doji candle, spent a lot of the day higher. But on that, if we just look again at the 30-minute chart, you can see really not moved much in Asia at all. As bad as neutral as it gets, really. And gold and silver, you can see that bounce back through the 200 MA on silver, but really not breaking any records today. You can see we're down again, so it looks as though that's going to be retested. Whether this forms a bottom or not remains to be seen, but obviously if we do break through that, then we've got our next line in the sand at around about this 22.37 mark. So we're looking at 23.81 as the lows in the last two sessions, and a break of that could precipitate more selling. We look at gold, and gold is really bounced off that low we hit in early March. These are 10-month lows we're trading at now, so looking okay. Again, pretty neutral in Asia. ASX 200, for those of you who traded that, this is what happened at the end of quarter trade that the Magnetic Boys talked about last week on Inner Circle. I trust somebody followed through and had a look at that. And if we just look at some of the currency pairs, here's Euro USD on the daily chart, looking to find a bottom around about this 1,730 mark. Just going to drop this down to there. Again, if we break through this, we've got a next port of call down at around about 116.36. We look at a 30-minute chart. We do see a little uptick in the euro. For short-term traders, there may be 20 pips in that, so one's got to ask, unless you're trading big volumes, if that's worth your while or not. Of course, Aussie US really flatlining along the 75.80 level, despite some big candles, big candle wicks. The candle size is actually relatively small compared to what we've had. If Look at the GB pound US, nothing since Asian Open, but to put this into context, it's been quite a strong week for the GB pound. Moved right back up to that 137.75 level. Sorry, 137.65 level, and he's tested that throughout the week really. But you can see these higher lows, and looks primed to move higher if there's some weakness in the USD. Finally, the US yen. Well, there's a shock. We're seeing yet another very significant week with yen weakness, which has provided quite a lot of potential trading opportunities in the short term over the last few days. We talked about one last night when we're looking at accumulation strategies, and let's have a look at the GB pound yen, and you can see why this is looking pretty good still, and you can see it is up in Asian trading. It is one of the few currency pairs that has shown any movement. So there was the breakthrough. This is what we sort of talked about. This was the accumulation strategy we give an example of. We've continued higher than that, flatlined a little bit over the last few hours. But if we look at this, we do look primed. We've got a nice pivot high at around about 152.77 to keep an eye on going forward. So really that is our chart of the day, with very little else looking primed to move. If we look at the Aussie yen, we've just had a pullback on that, which is not surprising due to the run we've had on this. Could be an interesting short, I guess, but really there's not much in this at all. You see where the next line is around about here. There's nothing in that at all that's going to make that very compelling. So around about 20 pips again. If we do get a bounce off that, arguably you could sort of say, well, look, there's 60 pips to the upside, but you're going to give most of that back waiting for a move. If we just put this on a line chart, you'd want to see it. You'd want to see it move above that 84.15 or 16 level. And again, because of that, we're restricting the number of pips that are available to around about 35. So that GB pound yen on the 30-minute chart is our chart of the day for FX. Obviously, as always, if there's any pairs that you want me to have a look at, then just quite simply type them in. Let's look at LYC because it's there, sitting there. So Linus, we've been talking about this over the last little while, and got 636 as our key level to be interested in. Would have been too hard to play that bounce, but if we do get a break of that, that's the aggressive entry. This is the more conservative entry at around about 663, 665. Let's call it 670 between friends. But even that move up to this level is worth almost 5%. Now, one of our favorites over the last few weeks has been Zero, and this is going from strength to strength. Let's just show you. So we've got 3 positions open in this now. We're accumulating into this as we have been doing over the last little while. But we put it on a line chart. You can see the whys and wherefores of that. So we had a break of a key level at 122, at 122.28, and now we're testing this level at 130, which is looking very interesting. And really, if we break this, then there's not much stopping us getting up to around about 140. So quite a significant potential jump there, but looks like a stock that the market is favoring for right now. In terms of the Afterpays and Zips, etc., let's just have a look at Afterpay, which has been under a lot of pressure of late. But we are using the 200 MA as a support now. So this is starting to look interesting again. Again, very choppy on the way down. If we see a reversal, that could be interesting, but we really sort of need a move over 115 to get interested in this at all, which could happen in a heartbeat, of course, with this stock. Let's just look at the index as a whole, which we didn't do. Apologies for that. Let's do a refresh of this. So we can see we're up 0.4%, which is really towards the high of the session. Very, very choppy early on, even moved into a negative territory. But we've got some follow through on resources. If we look at, which had a little bit of a sell off towards the back end of yesterday, but we've got some buying coming into BHP. A little bit of shyness in the banks. We can see Bendigo down, Bank of Queensland down. This reflects what happens in the US overnight. CBA to the downside as well. If we look at other resources, we can see Qantas struggling a little bit there, but certainly off the lows of the day, so it doesn't look as though it's dropping significantly. There's Rio doing well, and we can see Oz Minerals also up. So resources, the strong sector. Financials are looking pretty weak, and outside of that, those business stocks, so the zeros and the zips and the afterpays, all looking as though they're having some buying enthusiasm coming into them. Just quickly looking down to see if there's anything that's grabbing my. We'll have a look at BlueScope, and maybe so. Let's drag a BlueScope onto this. So here's BlueScope Steel. I'm not sure why it's doing that, but there's a really nice pop today, and really this is an important move. We had a closing high of essentially 2002 in on Monday after a break. This would have been a pretty nice breakout trade. We have talked about it a couple of weeks ago, around about that 1890 level. We've got a big move there, but you can see it's really chopped around since then. But you can see today's action is pretty positive. So that's one to keep an eye on. Zero we've already had a look at. Look at BHP just to see what's happening in the resource sector. So it looked as though we're going to get a rounded bottom type of formation based on this support here at around about 44.29. Ended up negative yesterday with that late sell-off. You can see that. See that big candle in the back end of yesterday, but you can see it's just starting to creep up again today. Let's just have a look at Oz Minerals. They've actually held up quite well compared to BHP. Let's pop it on a daily chart, and we've got the early part of the week close of 23.35 to keep an eye on. I'm not sure we're going to get there today, but you can see how this has been an important level a couple of times before. In fact, there was 4 candles there which touched it a couple of weeks ago. So this is looking ripe to move, but you may have to be patient and wait till next week for it to happen. Qantas, put it on a daily chart. Again, you can see we're interested in how this is bouncing off that $5 level at that point there. Looking as though it could be ripe to go. If we just put this into context, there's the closing highs over the last couple of weeks. It's going to look a little bit like a reverse head and shoulder. You can see a shoulder there. You can see a head there. There's the drop yesterday. So it'll be interesting to see where we go from here. If we can manage to turn this into a green candle, so 5.15 is the potential level of interest on this stock. TWE have been one that we've been again tracking for a little while, but really it's bouncing along that 200 MA. We're still waiting for a significant bounce off that. And the other one that we talked about yesterday was Seek. Let's just get rid of some of these lines before they get out of control. So put it on a line chart so you can see the action in a little more detail. So you can see how this 28.64 is interesting. We're going to move that up slightly to 28.64, and then we're going to move that up to 28.95. Let's call it $29. That would be our level of interest. It actually touched it yesterday, But if we get a breakthrough that, then it looks as though we could be up to test 31 in the not too distant future. So that is one to keep an eye on. Again, probably for next week. We don't see the significant buying coming into that today. But you never know how the end of the day might fit. Here's Wesfarmers, very, very choppy over the last couple of weeks or so. You can see we were here, we went up, we came down, retested. So that now looks as though there's support in place at $49. We've had a nice move up this week after last week's sell-off. So we'll look as though we're brewing for a move to retest that 55.90 level. There's not much in that. It'd be less than 3%, but for you guys, on the weekly chart. So let's just pop it back on the daily chart and just see that in a little more detail. We could have traded this level here if we'd been on the ball with a breakout last week. That would have yielded potentially, if it makes its way up to there, around about 6% or so. So one for an in and out nimble trade potentially, I guess, at best. And yes, we'll look at Zip, which has really performed pretty miserably. You can see that 200 MA looks as though it's going to become the support. At this stage, it's around about 770, so not that dissimilar to Afterpay in the way it looks. Okay, let's just check in on some of the questions. What considerations re-entry trades before a long weekend? It's a great question, Mark. Certainly long term, it shouldn't make a heap of difference, but obviously we've got some key data coming out between now and when we reopen next week. So you should add an element of risk to this, to any trade that you consider. So you may take that accumulation approach we talked about last night, in terms of entering a smaller position if you see something that's very compelling. Obviously, if you're trading for the long term, then it's a slightly different vibe completely. So if you, let's say, for example, fundamentally you like the idea of Qantas, then you're not doing that purely on technical terms. You're doing that on a fundamental long-term idea that flights are going to start increasing. So it depends what your outlook is on that, as to whether if your trading style is fairly short, then there are significant risks, so position size and accordingly would seem prudent. I hope that helps a little bit, Mark. All good. Okay, to the US. Yeah, absolutely. Mark, can you just drop me an email at mike@gomarkets.com and I'll flick you a link through to have a look at that at leisure. Let's have a look at the US. So Zoom is one that we referenced a couple of weeks ago, and we have got support around this 307, which looks pretty robust. Now, after that, it just depends on how brave you're feeling. Certainly, if you, from a conservative point of view, you would look at 350 or above. If you're more aggressive, then there is still quite a lot to be made in this. It's about 6% up to that 200 MA. So it does look, if we get a close above that 320 level, that could be interesting. If we look at Apple, which is just worth checking in on every week just to see where it's at. It's not going very far. You can see there. We just put it on here. We've got, I would say, a 125 target would look. You can see how it was support here, and here, and resistance there. So possibly being a little patient is prudent. Banks looked as though they were going to pop, but Bank of America, which is my favorite of those, just had a little bit of a shine out last night. Looks as though it's got some resistance now at 38.83. But I am making this our chart of the week, but bear in mind that bank earnings do start to come in as US earnings season kicks off in less than 2 weeks. So it'll be a relatively short-term outlook on Bank of America. Sorry, I didn't give you my chart of the day for the Aussie market, and it's going to be SEEK. It's going to be SEEK on a break of, well, as I said, I think we're probably going to have to be patient. What you can see, I've traded this a few times. Going to have to be patient to wait for a break of that sort of $28 or $29. But zero, it's hard to get past. The only reason I'm not putting zero up is because it's been there for the last 2 sessions that we've run. I wanted to do something different. But as I said, Oz Minerals are looking pretty good, and BSL are looking interesting at that level as well. So there's a few there to have a wee look at, possibly. Okay, any others you want me to have a look at? So we've got our chart of the day for FX is GB pound Japanese yen on the 30-minute chart. We've got BAC in the US, and we've got SEEK in Australia with XRO in brackets as one that we still like. So just type them in. Yen, Swiss franc, one we normally look at, but let's have a look at that. So here we go on the daily chart. This is always a choppy pair. But we can see we've got reasonable support in at 116.13. We've got resistance around where we're trading now, so it looks as though it's going to test the top end of that. I really don't like. I really don't like this chart. I don't think it's given us a lot, but as a long-term trade, perhaps that could be interesting. But you can see it's been in this range really since November, which is about, of course, it's about 140 pips. So another way to play this might be to see if it hits this level and bounces off to the downside. If you look at a 30-minute chart, you're not going to get much in the way of action. So if we take that as a potential break, there's only 27 pips up there. If we take this level here, come on, Mike, that'll do actually. Take that level there as temporary support, then again, you're only talking 20 pips to the downside before you hit the next one. So very choppy pair historically. Look at the Canadian yen. Let's just pop this on a daily chart. You can see that this has got stuck. So we had a breakthrough yesterday of key level, and that represented a level not seen since September 2018. We pop it back. You just see that today's trading is looking pretty ordinary. So there could be some profit taken on that candle yesterday, which was 76 pips. So we could have some. This could be a profit taking candle here. So really, we would look at that 88.24. But you can see the last hour it's really sort of dropped off significantly. Interestingly, just see how that. Yeah, it is over the last hour. I'm just going to check in on what the Aussies do and see if that's doing the same thing. So a bit of strength coming into the yen in the last hour, so that's noteworthy. So on the 30-minute chart on the euro, would probably put a support at that 50 MA that you can see there. As I said, this could be repositioning after what's been another tricky odd week for the yen. but that may blow our, no, still okay. So we can see on the, even on the GB pound yen, we've had a 15 pip pullback, but not enough to take it back to this level. And you certainly wouldn't trade this downwards. There's lots of steps there that are going to get in the way of any downwards move, unless it was a very convincing candle. Good sport. Can you please explain what date would need to be shares before being paid allowance for the date? Okay. So, okay, Valerie, what date? So there is, if we're talking shares, what? Okay, let's talk the shares. So the difference between shares and share CFDs is dividend is paid on both. With shares, and is paid to both if you're holding the shares before commencement of trading on the ex-dividend date. Okay, so each company has its own ex-dividend date, which you can find online. So if you just simply type in into Google, let's say ANZ dividend dates 2021, there we see the ex-dividend date here is the 8th of November. So this is the process. So anybody holding shares on the morning of that is entitled to the dividend. Then the day after, there's a record date, and that means essentially it goes to the registry who administers the shares of the particular company. And then that's processed, and then you get your check in the post, or however it's organized for you, about a month later. Okay. Now, the thing you get, which if you hold the shares, of course, is some franking credits, which means they're tax deductible because the company has already paid tax on it. If you hold the share CFDs, you're still entitled to the dividend. The difference is you get an account credit actually on the ex-dividend date. Okay. So it's worthwhile doing, but obviously you expect the underlying share price to drop by the dividend. So it's to compensate for that. If you're short a share CFD, then there's actually obviously a dividend debit on your account, because you're automatically going to benefit from the fact that it's dropped because of the dividend payment. So really, as part of your due diligence on the stocks that you own, do a little search, or the share CFDs you own, do a little search on that. So the plus of the share CFDs is you get it on the ex-div date. You don't have to wait 6 weeks. The minus of it is, of course, you don't get the franking credits, which is tax deductible. Hope that helps, Valerie. So as long as you're holding it before that date, Galaxy one we had a look at before. We had a look at it last time as one of the lithium stocks of interest. So let's pop a Galaxy chart on here. Let's stick it on a daily chart. Looks as though it's having a good day today. But yeah, we said look for a break. I think we met one on Tuesday. Look for a break of this sort of 265 level. Looks as though it's doing that. Some buying come back into that. The other stock which tends to, which is on the ASX 200, is Pilbara Minerals, and you can see that that's also moving nicely higher. Difference between these two is one looks like a buy now, the other one doesn't look like a buy quite yet, but that's a good spot. Hugh. Woolworths. Slam Woolworths on. Again, we've been chatting about this for a little while. Did break a key level that we identified before at 40.50. You can see there. Not a great deal of upside on this. Yeah, certainly from where it is now, we're going to hit resistance there about 2% higher. As a long-term trade, maybe not a bad place to be. Let's just put it on a monthly chart. You can see really that high there at 41.86 would represent a high for a multi-year high. So that is really where it's at. So 2%, you hit probably what is a major resistance. You can see how long it traded, sort of mid-Jan through to mid-Feb, traded around that level. So I'm not convinced of the upside on this, although it does look attractive today, or it did look attractive yesterday, a little bit of a pullback today. So not surprisingly, we often see stocks, if they break out, just pull back to the level they've just broken out from before subsequently moving higher. Webjet. Webjet looking no good. Back down to its 200 MA. Undoubtedly a reflection of the fact that things aren't opening as fast as people hoped globally. Again, potentially one for the future going forward. FTSE. If we look at the daily chart on the FTSE, we've got a clear level. We had a pullback yesterday, maybe an end of quarter stuff again, but we've got a nice key level there at 6775 to get interested in. And approximately, so about 2% to the upside till we hit those highs again. Okay, guys, well, look, that's probably our time for today. So thank you very much for your participation. As always, it's been great to have you along. We are running a session on Tuesday, so we look forward to seeing you then. Of course, have a wonderful Easter with you and yours. Trade safe. Just be aware that the next 24 hours could be interesting. We've got big data. We've got this long weekend coming. And so just take a little bit of care in terms of the increased risks that this particular set of circumstances generates. So take care, and we'll see you again next week. Thanks, Mark. Cheers, Gigi. You have a good one too. And you, Rachel. Take care. See you soon.